Joining us now, we've got Jim Neesen, Managing Partner, Connor Group, for a look at the state of private equity. Jim, it is so good to see you. I always love to see you in person, and I love when we get a chance to chat with you.
Thank you, Diane.
The last time we chatted, I know we talked about the state of the IPO market, but now we're going to dive into the state of private equity. Why don't we start out with when we think about the impact of trade policy from the U.S. and this tariff conversation that we've been having. It's been affecting markets, equity markets, name the market it's impacted. So how is it affecting the private equity market?
Yeah, I think it definitely has created uncertainty, and I think that's the big U word that everyone's talking about. I think for a lot of companies, it's sort of really understanding what is the impact on their business model. I just heard you mention that about companies giving earnings releases. In private equity, they have 1.2 trillion of money to spend, so they're really looking for deals out there. So I think what it's also done is it's created some opportunities to buy businesses out there. Businesses have been in the gym the past 2 years getting strong. So I think private equity, yes, tariffs creates uncertainty, but it will clear up. It's how can we look forward to deals? How can we raise money? How can we look to sort of really expand our presence?
And let me ask you this. So I have seen some data showing that deal volume did grow in the first quarter of this year. There's some EY data I saw up 45% on a year-over-year basis. So what is driving private equity strategy, especially when you think about the balance of the year?
Yeah, so I think three key things. Number one, private equity has 4.7 trillion. So there's so much money that's being deployed. They have about 40,000 companies that they've invested in. The second, I mentioned that dry powder, the 1.2 trillion. Last year was the fifth biggest year for private equity deals ever, $500 billion of deals that were done. So you had a lot of momentum going from 24 into 25. And I think the third thing is just a lot of exits out there. There is a lot of sort of desire to get these companies into an M&A or IPO scenario so you can return money to investors. That's called the LPs. That's a big part of it as well. Is sort of, it's like the circle of life in the Lion King, right? You need to return the investment so they can continue to put it in new funds.
Okay, and I'm glad you brought up the IPO market. I want to really quickly ask you about, because obviously the last time we sat down together, we were seeing what looked like the IPO spring, a lot of activity, and I wonder, what does it look like now, especially again given the trade policy uncertainty? We are seeing some hopeful signs, knowing that the Treasury Secretary will be heading to Switzerland at the end of this week to kick off talks with counterparties in China. How does the IPO market look now? Yeah,
so it's interesting. If you look at the data, there's been 114 IPOs so far this year. Last year, we had about maybe 260. So over 4 months, directionally, we've been sort of on a path, but it hasn't been big deals. It hasn't been the splashy deals. Right now, there is a chill in the IPO market in terms of companies go effective. We actually have quite a few that are on file, and they're sort of pushing things out until there's more clarity in the markets. But on the preparation side, I'd say the companies are still in the toaster oven. They're getting ready, right? They're getting, it takes 6 to 12 months to sort of get everything in place. We have 106 clients right now that are in that IPO window. And for them, 25, 26 is fine. Let's just make sure, get the business right. And then when the markets are there, you can make the match.
It's interesting that you made the analogy about the chill that we're seeing, because this was a chillier spring in terms of just temperature. So, there's some parallels there. All right, you all are also hosting a PE summit this week. Talk to us about the themes that you're going to be exploring there.
Yeah, so the PE summit, we have over 85 firms there representing 3.1 trillion. So about 70% of the assets under management are going to be at the conference. The themes, I think, are three big ones. Number one is, what is the opportunity in this marketplace? Yes, tariffs will be a discussion as well, but how does this create both buying and selling opportunities for companies out there? There's going to be a lot of transactions happening right now. In fact, some really good ones even got announced over the past week. So the chill is here, but there's still things getting pulled out of the fridge.
And let me ask you this. A lot of our viewership is a retail investor community. How can a retail investor have access to private equity?
Yeah, so this is going to be a huge story coming out over the next year, is that private equity products are going to be becoming available to the retail investor. And you see a lot of things. It's been in the press a bit, but it's sort of on the margins right now. 50% of the private wealth in the world is for private individuals. And so private equity knows that. And now what they're doing is they're creating products that are going to be available to both individual investors and your 401k. That's going to be the holy grail. 401k is 11 trillion in opportunity out there. So retail investors, my advice is start learning about alternative investments. There's lots of different categories, but get educated on it, because it's going to be coming pretty soon to a dealer near you.
Okay, to a dealer near you. I like that one. So I'm curious to know what you're hearing from the companies that you work with about their views on whether we are headed towards a recession or if they see this time period as a reset. I ask that question because, when you think about early April, we started having all these calls about recession from different economists. That started to back up a little bit, not completely off the table, but I'm curious to know your views because I know you have a lot of insight, and especially given the perspective you have from working with different companies in their going to public process, like a Tesla, like an Uber, which we just highlighted Uber's earnings a short while ago, and talk about the trajectory we've seen since they went public. What's your insight? What are you hearing from companies?
Yeah, I think if you look at the recession probabilities, right, the New York Fed says 30%, JP Morgan says 60%. I think a lot of the market and what I'm seeing is more on that 30% side. I think there's a few big reasons on that. The U.S. economy, 60% of the market cap sits in the U.S. Markets. 40% of the profits in the world sit in the U.S. markets as well. Those are huge numbers. We have a really unbelievably resilient market in the U.S. 30 trillion of GDP is bigger than any other nation by orders of magnitude. So I think right now, Warren Buffett said this is a nothing burger, right? It's like, in 30 days, the market lost $6 trillion and then gained $6 trillion. So right now, I think companies are like, let's be focused, let's stay the course, let's keep calm. What you can control is your business. Focus on revenue, focus on earnings, build a great business. There'll be a lot of cycles going on. We can all weather this.
All right, we can weather this. That's right. That's Jim Neesen, managing partner, Connor Group. Our thanks to Jim.